Hey everyone, and thank you for being here today. I'm Stephanie Fullerton with Fullerton Financial, and today we are going to talk about what are some of the spring financial checkups that we can do for retirees as a guide. So, as we think about stepping into spring, I think it's a great time to begin to look at how do we do a financial refresh. You know, for a lot of us, we begin to think about things like how do we declutter our homes? It's important to tidy up our finances as well. So I want to take a look at retirement planning because it just doesn't stop when we retire. It evolves with seasons. So here are some practical steps for spring financial checkup to ensure that you stay on track for security, confidence, peace of mind in the months ahead. So if you're taking notes, here's the first thing I want you to write down. I want you to reflect on last year's finances. So before we can ever begin to look ahead, we have to first take a look backwards. So here are some of the things that I want you to take stock of, where you are financially. I want you to ask yourself these very important questions. Did I stay within my spending last year? Some of you might say yes, and some of you might say no, but I want you to be truthfully honest with yourself. How did your investments perform? For many of you, I would hope that you've already sat with your investment advisor in this first quarter to take a look at how did last year's investments perform. Are there any adjustments that you need to make or rebalancing or reallocation? Here's another one. Did you encounter any unexpected expenses? And if you did, how did you handle them? Did you have money in the bank? Did you have enough in your emergency fund? Maybe it's time to kind of replenish that. Or maybe you didn't touch it and it's time to allocate some of that money out of the bank that grew. I believe these are really great insights on how we look at last year. Maybe if you overspent on items and that emergency fund went too lean, here's a time that we begin to build them up. So this reflection sets the stage, I believe, for smarter decisions as you're moving forward. Number 2, reassessing your budget. Ouch. Nobody wants to do that. But as you look back, now I believe it's time to look into our future, into the next 12 months. And so when you think about retirement, often what we think about is that it means living on a fixed income. For some of you, maybe that's Social Security, a pension, investment withdrawals, maybe it's dividends, maybe it's annuities. And so here are some things that I want you to think about when we're thinking about budget. First of all, let's look at the essential expenses. That's housing, utilities, healthcare, groceries. Let's not even think about inflation, although we should. In fact, I have an inflation slide that I put into our PowerPoint presentation today just to take a look over time. Prices have not stayed the same. Let's not even talk about eggs. I mean, eggs are just out of control right now. In fact, when I did eggs back in January, I priced them out at $3.82. And right now today, it's not uncommon to be paying $6, $7, $8, $9 for eggs. If you take a look at bread, chicken, steak, all of these things are things that back in 2020, if you would have bought just these essential items, you would have paid about $13, $14 for it. Today, easily over $20. So we have to equate inflation into our budget. Then after we look at the things that are things that we absolutely know that we need, here are some of the things that I consider that are discretionary: entertainment, travel. What trips do you want to take this year? What are some of those bucket lists? Hobbies, things that you enjoy during retirement. Really need to make sure that you are fitting those into your financial framework. Now, remember, a budget is not restrictive. I think actually when I look at a budget, I believe it can be empowering because what it does, it helps you ensure that your money is aligned with your priorities. So you want to take time for this. please make sure you can ask us today. In fact, I want to bring to your attention, there's a little chat box. Feel free to ask us questions. Ask for a budget worksheet. We have a great budget worksheet that we provide our clients that it will take you line by line, things that maybe you don't think about. It triggers your memory. Make sure that you're doing a budget. Number 3, review your investments. Look at how you're making withdrawals. At 65, you're likely going to begin drawing income from retirement incomes. So it's pretty important that we ensure that your strategy for withdrawal supports both your needs today. And here at Fullerton Financial, we are always looking into the future. We're always looking at inflation. How does it affect your overall ability to withdraw, and how much? Follow that 4% rule. Be very cautious in this. This is a guideline. And what this guideline suggests is that withdrawing no more than 4% of your portfolio annually could potentially avoid running out of money. So we want to make sure that as you make adjustments, that it's based on your lifestyle, and we take a look at market conditions as well as market portfolio performance. That's why it's super important that you keep your portfolio very diversified. Even in retirement, diversification matters. And this is where your financial advisor can help ensure that your investments are balanced for both growth and stability. Growth, preservation. Growth and income provisions. I think it's important, and this is something that we revisit every year with our clients, and that is, what is their risk tolerance? Has it changed? Are you comfortable with your risk? See, I believe retirement often brings a more conservative approach. Don't neglect opportunities for growth, but also make sure that you keep an eye on risk assessment and risk realignment. Keep a close eye on your account, because what that does is that it helps you with a couple areas that I think are super important in retirement. Overspending, and it allows you to make those adjustments. Sometimes it gives you adjustments where you can maybe take that extra trip or do that remodeling. Maybe it's time to upgrade that car, but it also can work in the opposite. It can also be a good indicator on when you need to tighten up your belt, maybe cut back, maybe spend a little less. These are things that become super, super important, especially when you're evaluating inflation. Every year when we sit down with our clients, we're evaluating inflation, we're evaluating their income needs, how to take withdrawals, where to take withdrawals, which account should it come from. And then super important is taxes. Do you understand where you are in taxes? I have a slide here that if you would like a copy of it, please let us know and we can get that emailed to you. But this is a great slide that shows you where taxes are right now and where they're going to be in at the end of this year. So there's important legislation. It's called the sunset clause that's going to take place at the end of 2025. Right now, here is where you are filing. But I also am going to tell you that at the end of this year, as we go into 2026, these rates are scheduled to go up, brackets are scheduled to go down, and standard deductions are going to go in half. We have an incredible tax firm that works alongside us now, that at Fullerton Financial we purchased this CPA group, and have included Beth and her team's phone number on this slide here. Please reach out to their team. They do tax preparation, accounting. They will look at tax planning. We work alongside them with tax planning. I think when I look at over the last 20 years of doing retirement planning, there's probably what I call the silent retirement killers. Things that we don't even know that are happening, things that we didn't even plan for. Perhaps our prior advisor did not take the time or the due diligence, or even they weren't licensed in this area. But if your current advisor is not talking to you about taxes, and I don't mean giving you the advice of don't worry about it, it'll be okay in retirement, you're going to be in a lower bracket. The reality is most people go into retirement with almost 90% of their portfolio that they have not yet paid taxes on. And when they go into retirement and they begin to pull from these accounts, they find themselves straddled into the same tax rate, perhaps the same bracket, and that could be dangerous. And don't forget, we've mentioned it a couple times, inflation, a loss of spouse. These are all things that should and need to be addressed. So please reach out to their team, reach out to our team. We work hand in hand, tax preparation and tax planning. You can't do one without the other. So next category, number 4, how are you addressing healthcare? Healthcare is often one of the biggest expenses in retirement. So as we start this year out and as we go into spring, starting with a proactive approach can save you a lot of time, money, and not to mention stress. Review your Medicare plan. Are you on the right plan for your needs? Don't forget, open enrollment happens annually. So you want to be prepared to make those adjustments. Again, here at Fullerton Financial, one of the things that we have been very strategic about is aligning ourselves with partners and team members that can help you in every area that you can think about when it comes to retirement planning, from income planning to balancing market risk to tax planning. And the other thing that a lot of people don't lean into is proper Medicare planning. That is why our partners here at Fullerton Financial are important to consult with. I've also included their name and number. Please make sure you reach out to them. Know what your options are before it's time to make the options. And they do an incredible job. No obligation. It's free. So why wouldn't you want to understand what are the right tools for you? What is the right co-pays that you should be looking at? Look at long-term care options. If you haven't been looking at it, and it's not uncommon, typically 75% of people, even greater than that, that I sit down with, have no long-term care provisions or protection. And the reason is, so a lot of people, when they think about long-term care, it's so expensive, they don't even want to think about it. So they don't think about it until they need it. So one of the things that I did here, and I want to show this to you, is I've put a slide in today on our long-term care cost. Now, long-term care in itself, I'm not a big fan of, mainly because if you don't use it, you lose it. But I also want you to understand the likelihood of someone needing long-term care age 65 and older is very high. On an average, most people need long-term care for about 3 years. According to Gensworth, and I'm reading off the screen right now, 2022, a study that they put together in 2022, the average cost of long-term care was $5,500 a month. So my question for you today is, how are you addressing long-term care costs? Don't put your head in the sand and think about, I'll just address it when it comes time. There are ways that we can show you that you can protect yourself from spend downs, from having long-term care coverage without actually having to pay for it. This is so important. Again, if your advisor is not talking to you about that, you're really not talking to a retirement specialist. You're talking to someone that is more interested in either selling you a product or recommending that you buy, sell, and buy, sell. Work with a fiduciary whose responsibility is to do what's right for you. Here at Fullerton Financial Planning, that is what we do for you. How do you do that? Simply by clicking on the link and asking for a free consultation. Here's what the consultation will do for you. We will evaluate risk. We will take a look at what your expenses are. We will look at inflation. We will do tax planning for you. This is crucial to retirement planning. And long-term care insurance, we don't turn away from it. We don't act like there's not a possibility. We're not reactive to it. We're proactive by putting together well thought out plans for today, tomorrow, and the future. Last thing that I want to talk about to you today is checking your estate plan. Starting the year financially smart is just not about today. It is also about tomorrow and your legacy that you're going to leave behind. Have you recently reviewed your will and trust? Do you know that your documents currently reflect your wishes? That is why here at Fullerton Financial, we can proudly tell you that we are one-stop shop. Not only do we look at your taxes, not only do we look at your risk management, not only are we looking at income strategies, which are so important. I always say there's 4 things that are very vital to retirement planning: addressing healthcare, addressing inflation, addressing taxes, and the foundation of every retirement plan is income. But none of those are tight until you absolutely know how is your estate going to be addressed after you pass away. You don't want someone telling you what you wanted. You want someone that is articulating what you wanted to be done. That's why here at Fullerton Financial, we have a paralegal that will review your will. They will look at your trust. They will make changes. They will make sure those documents reflect exactly what your wishes are. See, this helps you simplify your finances. And not only simplifies it, it makes it super easy for those people that are near and dear important to you to understand how you want your estate established. You know, just recently I was sitting in an appointment with one of my clients, and she was sitting there sharing with me. She had no idea that a very dear friend of hers, after he passed away, he not only made her the executor of her trust, he made her the co-beneficiary, meaning that she received everything. And it was very overwhelming for her, even though she was grateful and of gratitude and overwhelmed by the gift, the generosity. She never realized the importance of her friendship that she had given to this person. But it was overwhelming in the fact that she had no clue. So this is super important as you are working on those legacy plannings, that you make sure that you walk through with those people to let them know, these are the things that are going to be happening. These are the things that I want you to be prepared for. And this is really an act of love. It is not something that should take people off guard or take them by surprise. This is all about having a well thought out plan. So again, let me recap. In retirement planning, things that you want to begin to look at, especially as we talk about spring cleaning. Let's take a look at your budget. How was your performance last year in your portfolio? Have you done the necessary rebalancing? Are you withdrawing the correct amount? Should you reduce your spending to ensure that you don't run out of money in retirement? Or can you increase it? Maybe there's some extra things that you want to do this year. Maybe it's time to reflect that. Markets were good this year. Can you afford to do that? Have you looked at taxes? What do they look for you this year? And are you ready for the big changes going into next year? Have you done the necessary estate planning? Make sure that things are done properly. Is your will to your directives, not to someone else's wishes or goals? And then lastly, revisit your emergency fund. See, even in retirement, I can promise you unexpected things are going to happen. So I like to always say, let's aim to keep 6 to 12 months worth of living expenses liquid, easily accessible, maybe in a bank account, checking account, or savings account. So do you have enough saved for emergencies? Again, let me remind you, 6 months is what I recommend. And if not, I would encourage you to ask yourself the question, how can you prioritize building this fund this year? See, confidence in retirement comes from this, knowing that you are prepared for whatever life throws you. I like to say here at Fullerton Financial, that is what we do for our clients, is we help them look for the things that they know and possibly things that could be unexpected. Now, let's push financing aside. I love to talk about setting goals. Notice I don't use the word resolution. I like to talk about goals because I think goals are things that we can achieve and we can kind of check them off as we achieve them. Resolutions always feel like to me that you got to put like this deadline or date. And if we don't have it accomplished by a certain date, we kind of forget about it and push it aside or we feel defeated. So I want to talk about goals. Retirement is a time that I want you to live intentionally. And I think that when you look at that, I think your financial plan should reflect your aspirations, your goals, and things that you want to be intentional about. Here are the questions that I want you to ask yourself. In retirement, do you want to travel? And if you do, are you? In retirement, do you want to start a new hobby? And if you're in retirement, have you started that hobby? Maybe you want to spend more time with your family. That's up to you. But whatever it is that you want to do, I want you to be intentional about it. If you want to spend time with your family, then I want to encourage you. Begin to make dates with them. Set aside time. You know, one of the goals that Steve and I made this year in our journal is we sat out each month to at least make sure that we are spending quality time with our grandchildren. We try at least once a week with at least one grandchild that we are trying to spend time with. I can tell you not every week are we successful in that. But what happens because we wrote them down is we're reminded to be intentional about that. We like to travel. So one of the things that you can do to be super intentional is begin to plan out. You might say, well, Stephanie, I don't know where to start or where to go. Well, again, here at Fullerton Financial, we love to network. And one of the big wins that I believe that we have for our clients this last year is that we are networking with a great travel agent. And I would encourage you that if you don't work with one, they can simplify traveling for you. They can make it so easy. We have had several clients that have used this travel agency. So by all means, feel free to reach out to Dina. I think that if you don't work with one, that you would find your experience pretty pleasant and enjoyable with her. And if you do work with one, get started on those travel goals and travel dreams. Write them down. Write your goals down. Revisit them through the year. Be intentional. See, here's how I feel about this. When you align your finances with your dreams, I believe that you are setting yourself up for fulfilling and having a meaningful retirement. As we step into spring, here's what I want you to remember, that being financially smart isn't about restrictions. It's about freedom. It's about making choices today that give you confidence in your future. I want you to take this spring to refresh, to reassess, and to plan. To be proactive in managing your investments to healthcare, legacy, and most importantly, to align your finances with what matters most to you. And I think the best part about when we reach 65, maybe you're not there, maybe you are, and maybe you've passed it. Whatever it is, I believe that retirement is what you've worked hard for. Now let us help you get to where you want to get to. It is a time to enjoy retirement because I believe retirement is about having confidence. Confidence in knowing that your money's not going to run out. Confidence in knowing that your finances are going to work as hard for you now as you did working as hard to get there. So here's to being financially smart, and here's to fulfilling the seasons ahead of you. And I want to remind you today that it's easy to get in contact with us. I would love to be able to offer you today a free assessment. It's absolutely free. In fact, when you respond to this webinar today, consultation is absolutely free. There's no obligation. We will do a fuller risk assessment. We will do full tax planning. We will show you where you've been, where you are, and where you need to go. We will help you think about those things that a lot of people aren't thinking about right now. Let us help you do that. Let us help you get ready for what I believe can be some of the best years ahead of you. So right now, don't wait. Click on that button, set up a time, and come in. It's 1 hour. There's no obligation. It's absolutely free. So why wouldn't you take advantage of it? With that, I want to say thank you. Be watching for more webinars in the near future. I'm Stephanie Fullerton with Fullerton Financial, and have a great day.